Reserve Bank of India is expected to keep its policy rate unchanged in the upcoming Monetary Policy Committee meeting, following a notable slowdown in the country's GDP growth during the second quarter of FY25. The RBI's Monetary Policy Committee is scheduled to meet from December 4th to 6th. India's GDP growth moderated to 5.4% year-on-year in Q2 of FY25, down from 6.7% in the first quarter. Similarly, the gross value added or GVA growth slowed to 5.6% in second quarter from 6.8% in the previous quarter. The broad-based economic slowdown reflects weaker than expected performance across various sectors. October saw consumer price inflation or CPI inflation spike to 6.2%, which is a 14-month high. The recent inflationary pressures, combined with slower GDP growth, have led economists to predict that RBI will maintain its neutral stance in the December MPC meeting. Aditi Nair, who is the chief economist at ICRA, stated that in the light of the recent spike in CPI inflation, she anticipates a status quo from the MPC next week. However, she added that a rate cut in Feb 2025 might be possible if inflation moderates in the next 2 months, given the GDP growth figures falling short of expectations. Weaker urban demand and moderation in leveraged consumption contributed to the slowdown. High-frequency indicators pointed to sluggish consumption growth, while unsecured retail lending, including personal loans and credit card growth, also declined. Investment growth softened as well, with reduced government capital expenditure or CAPEX and muted private investments weighing on the overall growth trajectory. On a brighter note, the report highlighted potential for rural demand recovery in the second half of FY25. Factors driving this optimism include strong agriculture performance, payouts under the government schemes, and increased government spending, which could stimulate economic activity. While a recovery in rural demand, driven by strong agriculture performance and government scheme payouts, along with increased government spending, is expected to drive economic activity in the second half of the year, a report by HDFC Bank stated. Even as the RBI kept the policy rate steady at 6.5% in its October meeting, the 10th consecutive hold, the weaker than expected GDP data has increased the probability of a rate cut in Feb 2025. For now, however, the central bank is likely to adopt a wait-and-watch approach in its December meeting.